Basic information about banking. By the end of this lesson, you should be able to define the term bank, explain Indian banking system, and describe the structure of banks in India. The bank is a financial institution that acts as an intermediary between money savers and money investors. The basic function of the bank is to accept deposits and provide loans. Banks offer variety of services like accepting deposits from the public in the form of savings, current and term deposits, lending money for business, agriculture, purchase of house, purchase of vehicles, etc., offering credit and debit card facilities to the customers for making payments for the purchases or to borrow money from the bank, offering safe deposit locker facilities for safekeeping of customers' valuable items, allowing the customers to remit money or funds from one place to another in the form of demand draft or money transfer. These days, banks also offer electronic channels for remittance. Operating ATM machines for the customers to withdraw funds from their accounts round the clock. Accepting instructions from the customer and facilitating utility payments like electricity bill, insurance premium, etc. Accepting tax payments from the customers on behalf of government. Transacting in foreign exchange to help businesses and others receive or pay in foreign currency. Selling mutual fund units and insurance products. The banks accept money in the form of deposits and lend it to the borrowers. A part of the deposits collected by the banks are also invested in bonds and securities. So, taking deposits, lending and investment are the basic functions of the banks. Based on the ownership, the banks operating in India are categorized as public sector banks, private sector banks and cooperative banks. A public sector bank is one in which the Government of India holds majority of stakes, that is 51% or more. It is like the government owning the bank. The public sector banks are further classified as the State Bank Group, nationalized banks and regional rural banks. The State Bank of India is the largest bank in India with more than 10,000 branches across the country. It has 6 associate banks: State Bank of Bikaner and Jaipur, State Bank of Hyderabad, State Bank of Indore, State Bank of Mysore, State Bank of Patiala and State Bank of Travancore. Nationalized banks are initially started as commercial banks. In the year 1969, Government of India nationalized the top 14 commercial banks, and in the year 1980, 6 more commercial banks are nationalized. Regional rural banks, in short RRBs, are promoted by the central government of India, states government, and sponsoring banks focuses on making banking services available to the rural population. The ownership structure of RRBs include central government 50%, concerned state government 15%, and the sponsoring bank 35%. RRBs are established with a focus on rural development. In the case of private sector banks, majority of stakes are held by the individuals. Most of the private sector banks are having better capital, technology and aggressive business development models. The private sector banks are further classified as Indian private sector banks, foreign banks and local area banks. Indian private sector banks. These banks are incorporated in India and their shares are held by public. These banks are better capitalized, technology driven, aggressive in business development and are comparable to the foreign banks. Banks incorporated abroad but granted license by RBI to operate in India through their Indian branches are known as foreign banks. Most of the foreign banks operate in metropolitan cities of India. Their operations are technology driven. Their major businesses are corporate banking, foreign exchange dealings, export-import finance, and merchant banking. Local area banks are the banks that are licensed to function in a given area. They operate with less capital and cannot offer all the financial services that a commercial bank offers. As of now, there are only 4 local area banks operating in the country. People who come together to jointly serve their common interest often form a cooperative society under the Cooperative Societies Act. When a cooperative society engages itself in banking business, then it is called cooperative bank. The cooperative banks are registered under the State Cooperative Act. The cooperative banks functioning in a state are regulated by the respective state's government, and the cooperative banks operating in more than one state are registered under Central Act, and they are regulated by the central government. Cooperative banks are classified into urban cooperative banks, also known as primary cooperative banks, short-term cooperative banks, and agriculture and rural development banks, in short ARDBs. Though agriculture and rural development banks are called banks, but they do not perform all functions that a bank should perform. So, in principle, they are not banks. Short-term cooperative banks are further classified into state cooperative banks, district cooperative central banks, and primary agricultural cooperative societies. ARDBs are further classified into the state-level ARDBs and the primary-level ARDBs. Summary. The primary function of banks is to accept money in the form of deposits and lend it to the borrowers in the form of loans. The various types of banks operating in India are public sector banks, private sector banks, and cooperative banks.